Here are the best and the worst performing stocks that I have across my portfolios right now. I'm only going to be including stocks that I either actively invest into or that I have significant money in, because I do have some really random small amounts of money on my free trade portfolio that have come from just free shares, or I have bad investment choices, and to be honest, I just need to sell out of those positions. So I'm not going to include them in that video because there's definitely some of them that have really plummeted recently. The way I'm going to be looking at which of my stocks are the best performing and worst performing is by doing it as a percentage. So I'm not going to be looking at which of my stocks have given me the most in return right now. I'm going to be instead looking at it as a percentage. So to do this, what I'm going to do is I'm going to look at the market value of a stock as of the 30th of October, and then I'm going to minus the initial value, so what I actually paid for that stock. Then I'm going to be dividing it by the initial value and timesing it by 100 to get a percentage. And this of course will give me the percentage increase or percentage decrease, so the gain or loss. And you should know that this fluctuates all the time because of course the market value right now of any stock is just going up and down. So let's start off on a positive note. We'll do the 3 best performing stocks in my portfolio first, and then we'll move on to some of the more heartache that I've got going on. The 3rd best position in any of my portfolios is actually an ETF, and that's VUSA. And it's VUSA specifically on my Interactive Brokers account. Now, I do also have VUSA on my Vanguard account, but that one is not up by as large of a percentage. I think it's up by like £35 at the moment, but that only works out as like 0.84% because, like I said, I'm calculating it as a percentage loss or gain. Therefore, it matters what price I bought in at, not just the price that it is today. So VUSA on my Interactive Brokers account is currently up by 1.74%. This is an ETF of 508 different companies, and it tends to be less volatile than if you invest in just one individual stock, because of course you're getting the diversification all across all of these different companies. And therefore it's very unlikely that all 508 companies will be performing badly at one given time. So they kind of help balance each other out. The 2nd best performing stock right now that I have is Trig, so Renewables Infrastructure Group. I really like the diversification of owning a renewable energy company inside of my portfolio. I like this because I feel like the pressure on the governments and the pressure on the world about climate change is pushing people more towards renewable energy. So of course I want a little piece of that pie in my own portfolio. And I also like that Trig's own portfolio is spread out across a lot of Europe, so it's not just based in the UK. Again, that gives a little bit of geographical diversification for me too. And in first place, the best performing stock that I have right now is BAE Systems, which is up by 7.16%. With the threat of wars and everything going on at the moment and all the global tensions happening, this stock is doing pretty well. And you should also remember that the US is one of its biggest customers. However, last time I looked at this stock, they did have a bit of debt, which obviously isn't great. BAE Systems have been performing really well, like I said. Over the last month, they're up by 2.68. And if we jump to year to date, they've had an absolutely incredible year to date. You can see this here, up nearly 50% over the course of what hasn't even been a complete year yet. And you can see that the massive jump they had here, absolutely incredible. If we zoom right out, they are at the highest they have ever been. So is it likely that they're going to carry on increasing given the global tensions, or are they due for a little bit of a downward turn to balance themselves out a little bit? Let me know what you think. Okay, so now we've spoken about what are my best performing stocks in my portfolios. Let's turn and look at the worst performing stocks. So those ones that are just not looking very good at the moment. The 3rd worst performing stock for me that I have is HSBC. And at the moment, that's down by 19.6%, so minus 19.6 if you work it out as a percentage change. The increase in interest rates will of course benefit the banks, but HSBC, along with lots of other banks I'm sure, have a lot of credit loss at the moment. Over the last month, HSBC has been down by 1.16%. Over the last 6 months, a similar picture, down by 11.07%. And if we look at them year to date, they've not really done anything. They're down by 3.28, but yeah, they're not really doing anything at all. If we max it out, they've got some ups and some downs. At the moment, we're definitely not at the height that HSBC could be. Will the situation, the financial and economic situation that's happening right now, bring this back up? Or do you think they're going to carry on trending down, or maybe a similar picture where they're just trending sideways? So far, all of the best and worst stocks that I've shared have all come from my current ISA account on Interactive Brokers. They've all been dividend paying stocks, which you'll know if you watch any of my portfolio updates. But the next one, so the second worst performing stock, is not a dividend paying stock. It's not one that I have in my ISA. It's not a UK stock, but it is one that I purchased a while ago and I just plan to hold it. And that is Tesla. And that's in my free trade account. For me right now, I really like corn.
For me, I really like corn.
For me right now, Tesla is down by 22.13%. No, it's not. For me right now, Tesla is down by 22.3%, which equates to about £150 loss at the moment. I purchased Tesla on the 30th of November, the 21st of December, and the 29th of March. So I purchased an amount of Tesla across those 3 dates, and I haven't purchased any more since, nor have I sold my position at all. Tesla haven't really been doing very well over the past day, but more importantly, the past month, they've been down by 6.13%. 6 months, again, they're down by 24.4%. Year to date, similar picture, they're down again by 43.11%. If we max it out, you can see that Tesla had an incredible run here. They're absolutely dominating it. It's incredible to see this graph. And right now, they're just down here. And to me, I'm not concerned. I'm a big believer in Tesla and Elon Musk, and I think this stock is just going to keep going up. When Tesla recently released their third quarter revenue, they missed predictions and estimates, which could be a reason why this stock is not doing so well right now. Over the third quarter, they've produced over 365,000 vehicles, and they've delivered over 343,000 of those vehicles. However, with these numbers, it has led to some worry and some speculation that they're not actually able to meet the demand, having produced over 22,000 more vehicles than they've actually delivered. They've also had some issues with supply shortages and rising costs, but they're still ramping up production, and in my opinion, they are still leading the way for electric vehicles. And Elon Musk reiterated on the earnings call on the 20th of October that there's still excellent demand for the fourth quarter. So we're down now to the worst performing stock across my portfolios. And this is taken by Tritax Big Box REIT. It's down by a whopping 36.82%. They own, they develop, they manage logistic buildings like warehouses for big companies like Next, Amazon, and Tesco on long-term leases. You could argue that they might continue struggling as the consumer spending goes down and living costs rises, but I don't see the customers that they serve going out of business anytime soon. Therefore, I think they're going to continue doing okay. Let me know what your best performing and your worst performing stock in your portfolio is right now, and I'll see you very soon for another video.